The chart that you see behind me is, do you see the bottom? It's sort of just a joke, of course, but I do want to say one thing about this chart. There are millions of people in markets doing all sorts of different analysis, trading systems, buying, selling, this strategy, that research. The point is markets are really competitive. And, there is no such thing as an indicator that works all the time. No matter how crazy or ridiculous, the people are out there investigating markets, and I'm just having fun with this. This is just I'm using some tools here to draw this out, but let's dive into the real purpose of this video. And the purpose of this video is, look, I've been in markets for about 10 years. I'm still a noob in the grand scheme of things, and I wanted to make this video for myself, but also for, anyone who stumbles across it, see the feedback that it gets, about dumb things to avoid and things you should be doing in markets. So the first one, if you're a trader investor, is avoiding FOMO. FOMO stands for fear of missing out. The core feeling is everyone is getting rich, but you want to avoid that. I'm going to dive into this in more detail in just 1 second. The next aspect is having a plan, or the mistake would be not having a plan. Plans help you avoid FOMO, and I'm going to show you some strategies for creating a trading or investing plan. Stick with me in this video. And the last point is a process of evaluation. That's the term I use, at least, process of evaluation. And I'll just read a quote. This is something Peter Lynch said. He's a famous investor. He said something along the lines of this: people will spend days, weeks, months researching a new car or a TV. They will hear a tip from someone on a bus and go out and buy a stock with their life savings. Hilarious, but it's true. There's something about markets that just gets people so quickly diving in and just throwing their money at anything, really, in an attempt to get rich. So let's dive into these in detail. This video is meant to help you just think about markets more deeply. Once again, I think this is so funny to me. I just drew this for some fun, added all these indicators and drawing tools. Just remember, there's no such thing as one strategy or style that works 100% of the time. And that's something you have to keep in mind while watching this video. But let's start with FOMO. We're going to go to FOMO first. And FOMO is definitely a powerful emotion in trading. And I had wrote some notes down here while looking at this chart of Twilio. And first of all, Twilio has been a fantastic company, and people have done well for themselves investing in this for the long term. But the reason why Twilio came to mind is I had some friends recently text me right up here when it was at about $400 a share, basically saying, oh my gosh, have you seen this Twilio company? We got to get in. This is it. And I kid you not, Twilio is down about 18% from that text. And at the lows, it was down almost 30% from that text. And the point is that, look, I love my friends. I'm just saying, when you're a new investor or trader, it is so easy to chase. And for some reason, as a new investor or trader, you often get caught holding this expensive bag. I still happens to me, but when I was really new, I did it all the time. I seemed to always buy the top right here, always buy the top and then sit through this drop down. And so to quickly go through what this FOMO means in more detail and some of the emotions is fear of missing out. So price is running higher and people are chasing it higher. One of the really strong emotions is everyone is getting rich but me. Everyone around you is getting rich buying this except for you. Now you feel like you have to buy it because otherwise you're going to miss out. And sure enough, this emotion happens all the time. If this has happened to you, leave a comment in the comment section below. And something I want to say about this is markets have been open for over 100 years. You heard that right. Markets have been open for over 100 years. They aren't going anywhere. You never, ever, ever have to just go out and buy anything. That is just probably the worst way to think. Get that out of your mind. If you ever feel the urge to buy without doing any research, stand up from your desk or your computer and get the heck out of there. Take a breather. You do not ever have to chase anything. The markets are going to remain open. Something like crypto is open 24/7. Crypto is open 24/7. Deep breaths. You got more than enough time to make a buy. It does not have to be right now. So another component of that while thinking about FOMO that I want to communicate in this video is we are more plugged in than ever. And what does that mean if we're more plugged in than ever? Well, we know that our phone here is sending us notifications, or our friends are texting us whenever price is spiking, or whenever people are talking about it, or when it's in the news cycle, or maybe the story just sounds so good. And all of these points are just being sent to us. We're at our computer and price is spiking. We're with our phone, friends are texting us. We're so plugged in, FOMO is more powerful than ever. And in this example, what I want to do actually is just show you a recent moment. You could call it mania. It had to do with these 3D printing stocks. In this example, DDD. You may remember it if you're watching this video. I've been in markets for a while, almost 10 years. I was still new when this was happening. I actually even chased this stock myself. That's why I remember it so well. I lost money chasing this mania. And as you can see, the price hit $97 a share. And you see what happened afterward. It went all the way down to 12. That's an expensive, expensive bag. And what we can do is actually we can just relive these moments. So let's relive FOMO on this chart, and I hope that this, really helps. So here's what we're going to do is we're going to look at this chart and we're going to pick a starting point. Let's pick right here. And so what often happens with FOMO, the first stage often is awareness. So you hear about something, awareness. So you hear about it, but you don't necessarily buy it, but now you're watching it. And so we're going to click play on this and just watch what happens. Imagine me, many years ago, hearing about this 3D printing stock that everyone wants to buy. And so I open up the chart and watch it for a few days. And then that happens. Whoa. The first thing that comes to mind is, oh my God, I missed it. This is the time to buy. I have to get in. It's in the news cycle. People are talking about it. Wall Street analysts are coming out with news and reports on it. And sure enough, I buy because I have to get in. This is a world-changing technology. Everyone is talking about it. I am in. And we just kind of see what happens. And it looks to me like in less than a month, it looks like about 3 weeks' time, I would be down about 25%. And keep in mind, when you purchase things with this FOMO attitude, fear of missing out, you rarely ever have a plan. I just bought. I didn't set a stop loss. I didn't commit to a long-term strategy. I just bought. I thought the world was changing overnight, and let's just watch. And you can just see, just like that, the money is essentially turned into a fraction of what it was. And I think it's safe to say that we've all been here at some point. And next thing you know, a simple trade has turned into a long-term investment, or maybe one day you just sell it and get the heck out. But what you see here is just an absolutely brutal trouncing of what can happen when you just chase without a plan. I had no way of exiting. And that right there is why you have to avoid FOMO at all costs. And when you look at this, it just keeps going and going and going. And now we can zoom out, and it is not pretty. Let's look at now what just would have happened. For example, assuming I never sold, I'm down 90%. And by the way, I have lost 90% on a position before. 100% I have. When I was first getting started, I bought a stock thinking it was something it wasn't. And I FOMO'd it, and I actually held it for a 90% loss. Trial by fire, whatever you want to call it, happens to everyone. I'll never do that again. And that's why I do want to talk about this, is because I know I've lived it. I've done this. And by the way, like I said earlier in the video, there is no one strategy wins all the time or anything of the sort. I'm mostly making this video for myself, and maybe it's going to help someone else. I've seen some people make videos on YouTube about these topics, and I want to see if I can do it and maybe even do it better. So that is FOMO, and that is a really, really, really important emotion to avoid. Avoid FOMO best you can. Now, the next thing that we want to discuss is we want to talk about having a plan. So having a plan is really important. And the reason why having a plan is important is, we'll go to an example here of Amazon, is it's how you avoid FOMO. So not having a plan is how you know, I don't know if this example with 3D systems. So point 1 is FOMO, point 2 is having a plan. Conversely, not having a plan is something you want to avoid. In the example I showed of me hypothetically buying this company at the exact top and then getting crushed on the way down, I just bought without a plan. No plan whatsoever. Let's just go through an example now if I had a plan and what a plan could look like. Okay, I'm going to clean up this chart a little, and I'm going to start from scratch and show you from start to finish why having a plan is essential, and also an example of what your plan could look like. All right, I think I want to buy Amazon. This is just an example. I'll say it again, everything in this video is just for education, entertainment. I'm trying to see if I can make these videos myself. So here's a chart of Amazon, AMZN. Look at this straight line across. I noticed something. Rather than just FOMOing and buying right here, or maybe waiting, it goes up, and then I just suddenly buy again, I'm going to build out a strategy. Now, your strategy could be anything. It could be hard-coded. It could be a fundamental research strategy. Maybe you find a price level that's important to you based on evaluation, or it could be technical. And in this example, I'm just going to do a technical buying plan. I noticed that on this line I drew, price bounced here. Price pretty much bounced here, price bounced here, price bounced here, and this is sort of where it started right there. So I say to myself, rather than FOMOing this, and I want to get in on Amazon, I'm going to wait for it to test this level. I'm going to sit back and wait. I am going to just put my feet up, hang out, do whatever I have to do, and just wait for it to come back to this level. Now, it may not come back to this level. Maybe it really does just soar. Well, at that point, it's time for a new plan, and I'd have to reevaluate what my thinking is, or maybe, it gets rejected here, and that's a point where I can even get another entry coming off that rejection. But the point is this, you have a plan, and there are thousands of stocks out there. The market has been open for hundreds of years. No strategy or plan is going to work all the time, and if price does run, hey, guess what? At least you didn't risk anything without a plan in place. And here's an example now of me executing this plan. I'm really going to show you now. So this price level says $2,960. So what I can do is actually on this example, by the way, this is TradingView that I'm doing this, I'm going to place a buy order. A limit order means I only want to buy at this level. So I click buy, select limit. It looks like we have about 2,950 is what actually I will do. 2,950, 50 shares. A part of my plan, I'm going to enter in a stop loss. This means if price goes lower, say it crashes right after I buy it, I want to get out and reevaluate. So what I can do is place a stop loss at a level that makes sense to me and say it's the low of, this breakout here. So it's that 2,800. So we do 2,800 is our stop loss. Click buy. And our trade has been placed. So check this out. Now I'm going to sit back and wait. This is the trade I want. I planned this trade out. I want to get in at this level. I'll get out at this level. And that's how I want to enter. Another example that you could do is maybe you are trying to build a long-term position. And rather than just FOMOing in at any point, what you could do is set multiple buy orders over time. And you could do that, say, in increments of 10% from its current price. So this would be 10%. You could also do an increment, say, of 20%. So if it ever goes through a 20% correction, and let's do 20%, and you can put both those orders on the chart. So let's just see, a 10% correction would take you to 2,700. So let's do buy limit. Let's do 10. Let's do 2,700 buy. Now let's set up another order and let's do the 20% correction, 2,400. And let's do 2,400 buy. And so now what we've done, if in one example I showed you was a plan for buying off these technical tools, the next one is this is sort of a buy the dip plan. I'm buying over time, either at 10% corrections or 20% corrections, and I want to scale in and build a position in this over time. So my orders now just sit there and I walk away. So this is how you can plan out your buying and selling process, and it's way, way better than just FOMOing any sort of trade or anything like it. Now, that's point 2. So we've gone through now not having a plan, or why you want to have a plan to avoid FOMO, and just think a little more deeply about what your goals are. And then, of course, we talked about FOMO, how to avoid fear of missing out and what it means, what it looks like. And for the last example that we want to talk about something that I call a process of evaluation. So let's get this up on the screen. A process of evaluation. And the most important point about process of evaluation, I'm going to read that Peter Lynch quote again. People will spend days, weeks, and months researching a new car or TV. They will hear a tip from someone on a bus and go out and buy a stock with all of their life savings. So a process of evaluation is how you avoid that. The same way you go and research a car, all the dealerships you go to, all the reports you read, or the same way you buy a TV, all the reviews you read, all the prices you compare, is the same thing you should bring to the stock market. I call it a process of evaluation. What is your process for evaluating a potential buy or sell? And how about I just go through some examples? For example, on this chart of Netflix, let's dive into this chart of Netflix and get right to it. Now, what you could do is, let's say you want to buy Netflix. We all know it. We've all used the product. Well, it's trading at $524 a share. What does that mean? We can go and do some financial research on Netflix. So financial research will tell us the basics of the company. Maybe we want to look into who their leadership team is, how much money they make, what's their future projects like. So let's do it. First of all, we can look at something like market capitalization. And market cap tells you how much the company is worth right now. And if you look closely, its market cap is about $230 billion. $230 billion for Netflix. Does that sound like a good deal to you? That's up to you. This is just showing you an example. Another thing you could look at, of course, is maybe you want to dive into its total revenue. It makes about $6 billion a quarter right now. It's quite impressive. But what you could do is zoom out and ask yourself, is the growth rate slowing? And do I want to buy now while the growth rate is slowing? Do I really want to buy if the growth rate slows down? These are questions that you can ask and figure out. Remember, these are just examples. I don't know if it's slowing. This is just using this as an example. But the point is that you have heard of Netflix. You think you want to buy it. But what's your process of evaluation? Does $524 a share make sense? Or do you want to plan something out and dive in deeper to make sure this price makes sense? I just showed you fundamental research. It goes way deeper than just market cap or revenue. You can look into everything. Its management team. You could dive into its most latest news. What are people saying about Netflix? What projects are they working on? How are they going to keep growing? Or you could simply be a technical trader, for example. And in the Amazon example, you could just draw out some lines that look interesting, study volume. So why don't we do that? We'll add volume to this chart. So we've added volume to this chart. And why don't we take volume into consideration? And let's do an anchored VWAP drawing line on this. So let's just do it from this earnings report. And that's interesting. So we kind of see now what's the average price of Netflix based on volume. And this is quite interesting. We actually see that around $4.92, according to this anchored VWAP line, might be the better entry. So we want to get involved in Netflix, but we want to wait for some form of, a better, just a price that makes more sense. Well, once again, we could wait, and we could use the technical tools available to us. Once again, there is no such thing as a technical tool that always works, but you can use these tools to make better decisions or fit your goals. So, these are the 3 things that I wanted to talk about in this video, and I hope that they helped. And it's I'll go back to this Netflix chart. The 3 things are avoiding FOMO, having a plan, so avoiding FOMO. We've all been there. Fear of missing out. Everyone's getting rich but me. Get that feeling out of here. Get away from your computer if you're ever feeling that. If your phone is buzzing, if you're losing money, or if you're getting texts, deep breaths. You have time. Time's on your side. Have a plan is next. So plan out your long-term goals and strategy. By the way, I always say, go get a financial advisor if you're really struggling with this. This video is for beginners, of course. That's why I say that. But make sure you have a plan and understand what you're doing. Don't just rush in and buy like I showed you in this example before. This is DDD. I just sort of bought the top and got crushed. And then lastly, the last thing I showed you, process of evaluation. Remember this Peter Lynch saying. This Peter Lynch saying I think is fantastic. He's a legend in the investing space, by the way. He kind of popularized investing in for the retail crowd. He was very encouraging of people, doing their own research and essentially, getting out there and learning more about markets. And I really think it's important to keep in mind. You spend days, weeks, hours researching a car or a TV. Heck, I spent hours the other day researching what frying pan I should buy. I kid you not. I was reading all the reviews everywhere online, trying to figure out the perfect frying pan. But in the stock market, I just see something sometimes and click buy. And I'm sure many people out there have done that before too. And that has to stop. That is really important. What is your process of evaluation? How are you doing research? What research are you doing? Does it fit your plan? And then, of course, these things all help you avoid FOMO and just think more deeply about the market. Conversely, just having patience. So I hope this video helped, and I appreciate everyone who's subscribed to the channel and watching. You can leave any questions or comments below, and thanks a lot. I'll talk to everyone later.